All right, what is going on, bull runners? Welcome back to the channel. So we have some breaking news to bring to you today in the world of finance, in the world of crypto, with tons of investors getting their money out of the banks in the light of the financial disclosures that took place earlier this week. On Monday, First Republic released its earnings report for the first 3 months of the year, and those results stunned Wall Street. They stunned everyone out there in the globe because of what's been happening with this banking crisis. And the California-based lender said it lost more than 40% of its deposits in March as customers move billions of dollars elsewhere. And investors are essentially forecasting that the bank is close to worthless once those losses are realized. So in this video, we're going to be talking all about that and what you need to know, because what happened with Silvergate Bank, Silicon Valley Bank, and now First Republic Bank, their stock collapsed over 95%. 95%. Can you believe that? The past 6 months, and over 55% in the last 2 days alone, signaling the banking crisis is far from over and will have massive side effects that the Fed will have to respond to. And like Silicon Valley Bank and Signature Bank, First Republic, which was founded back in 1985, catered to wealthy individuals as well, and many of its deposits were too large to be insured by the FDIC, over $250,000 per customer. So this disaster is important for you and the crypto market, and it's important to understand what's going on because they grew to become one of the largest banks in the United States with around $289 billion in assets in the report for the first quarter of 2023. Compare that to Silicon Valley Bank, which had $210 billion, less than First Republic, before their collapse. And after Silicon Valley Bank and Signature Bank collapsed, the federal government effectively insured all deposits on those two banks, and they created their emergency bank term funding program, is what it's called. And in the emergency bank term funding program, they basically wanted to bail out the banks, but regulators didn't commit to backstopping uninsured deposits across the board, because could you imagine like what that would do to their balance sheet for the Fed, since the Fed had to add it was over $300 billion in 1 week to their balance sheet, which eliminated an insane amount of their quantitative tightening. So when Silicon Valley Bank failed and they added that $300 billion to their balance sheet, right, effectively what that did is that pumped the crypto markets at the time. So we saw rally in Bitcoin over, 80, 90%, almost 100% rally in the altcoin markets because investors had no confidence at all in the banking system at that time, which caused more inflation from the Fed when they do that, right? When they create more stimulus, when they create more money, when they add to their balance sheet, and they're loose with their lending, they're loose with their money, that pumps precious metals, that pumps the stock market, that pumps the crypto market as well too. So I'm going to explain all of that in this video. So give this a like if you appreciate videos like this. And now that First Republic is cratering, this causes another massive spike in crypto that's going to take place. So I have some powerful news to bring to you in this video, and also some alarming news too that you need to be ready for that will directly affect your savings and your wealth. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it in the comments below. Let's run it. What's going up, bull runners? Nick Anderson here with bullrunners.com. We're going to kick this video off with a giveaway. We're giving away over $100,000 this year, and if you want to be entered in to win every single week, all you have to do is like this video, comment 777 below, and make sure you're subscribed to our video newsletter at bullrunners.com, where you can register for our next live event, because that's where we announce the winners every single week. With that being said, let's make some money. All right, so we're coming to you right now from my balcony out here in beautiful Miami, Florida. As you can see, the sun just peeking through over the clouds nicely, looking very nice right there. They're building a new building, and buildings are going up like crazy, guys. The development out here is insane, and Miami's actually one of the most friendly crypto states in the entire country. But I'm going to be talking about regulation in this video too, because immediately after Silicon Valley Bank and Signature Bank collapse, First Republic lined up additional financing from the Federal Reserve and JP Chase, the biggest banks in the US, basically gave it a $30 billion lifeline. Goldman Sachs and Wells Fargo agreed to help with the deposit to basically bail them out. And First Republic announced plans to cut costs by laying off 20 to 25% of its workforce, and those numbers could be higher by the time that you're watching this video in the coming months, and reducing its real estate holdings. Now, this is a big deal. This is a massive deal. It's Huge deal, because First Republic borrowed heavily from the Federal Reserve and the Federal Home Loan Bank, a government-sponsored lending group, to meet customers' withdrawals. And there could be a Federal Reserve press release coming out very soon about this. So make sure you like this video, you subscribe to the channel to stay up to date when we drop the news for that, because First Republic share prices is nearly zero and its bonds are trading at highly distressed levels. So they don't want to have to sell their bonds at a loss for there's unrealized losses. So other banks and the Fed will have to step in and, you guessed it, bail them out. Or they would either let it fail and see the ripple effects and risk a systemic, wreck of the rest of the markets in the entire banking industry and more ripple effects from that. So the Fed really only has a few options here. And what would they do? Well, they could lower interest rates at their next meeting coming up in a week, or they could inject liquidity into the system by buying their bad bonds and adding more to their balance sheet, which would defeat the purpose, though, of their interest rate hikes that they've been doing this past year to fight inflation, by bailing out the banks again and again, trying to save the system from imploding in and of itself, because all of this bad debt that's out there through the bond market, right, and all these loans. So realistically, the government will declare a systemic risk expectation and inject more into the system, benefiting who? Who would that benefit? Well, that would benefit America's biggest banks. That would benefit JP Morgan, that would benefit Bank of America, Wells Fargo, Citigroup, Goldman Sachs, Morgan Stanley, and a few others, because the Fed has to take the pain of the bad bonds, so the big banks don't take that pain. The Fed does by adding to their balance sheet by those bad bonds. So in First Republic, right, it's being seized by if First Republic is being seized by the FDIC, those same banks will face a bill of roughly $30 billion. And that's because the FDIC extracts a levy from healthy banks to help foot the bill for those that collapse, which would cost the big banks. It wouldn't cost the big banks really anything if Big Daddy Jerome Powell at the Fed injects liquidity to bail them out and gives them their allowance for that. So JP Morgan and Bank of America are most likely going to end up paying for First Republic struggles, according to Business Insider, but it's just a question of, how much are they going to pay, how's that's going to take place, and if the Fed will inject more money, or if the Fed's going to lower interest rates at their up-and-coming FOMC meeting without having to inject money, risking, rising inflation even more. So the likelihood that the Fed pauses on their interest rates for their next meeting just increased. It's a little bit higher now. I believe in one of my previous videos, it was over 80%. We're expecting, 25 to 50 basis points, which is pretty common considering they haven't slowed down at the fastest pace in decades. It's like 50 years they've been rising faster than they have since like the 80s and even before then. And with inflation still at 5% last month, they still will need to raise the rates a bit higher this year either way. So, they're in a pickle right now of rate increases while potentially adding more to their balance sheet to bail out Signature Bank. So it would have an inverse effect there, right? Because when they raise the effective federal funds rate to combat inflation, but yet they're adding more to their balance sheet and buying the bonds, inflation is going to be persistent. So that's why expect persistent inflation above 2% for an extended period of time. So expect the cost of your eggs at the grocery store, all of this. You're wondering right now, what is this? Why does this matter? Why is this important? Why is this dude ranting on his balcony, talking about this stuff? Because when you go out there and you purchase goods and services in the economy, right, and if inflation persistently stays high, but yet the wages at your job are not going up and the spending power of your dollar goes down because of inflation, then your retirement and your savings gets eroded away, especially if you're young and you don't have a plan right now, and especially if you're nearing retirement age. So this affects everybody. And this all has a direct effect on XRP and the rest of the crypto market, because bank collapses like these, what they do is they cause the investors to lose even more confidence in the traditional banking system, and they move money into specific industries. And crypto has been one of those industries that's been branded as a means of storing their wealth and preserving value as a hedge against, you guessed it, inflation. So the potential bailouts from the Fed would lead to more inflation, which would cause investors to run to crypto and precious metals as well too. And potentially even the stock market, because the stock market's been there for longer than crypto, even faster than ever before, because it's been a hedge against inflation to preserve your wealth or make money. And precious metals, I see precious metals doing especially well over the next few years with what I've talked about in previous videos. If you go back on the channel and you check those out about the China Belt and Road Initiative, which is the largest infrastructure project in human history, and how they are accumulating more precious metals and mines over in Africa and making partnerships with the BRICS nations, to usher in their plan of their precious metal-backed digital currency. So I do expect precious metals to do well, but there are some concerns right now that would slow down this crypto bull run. Number one being delays in the outcome of the Ripple versus SEC lawsuit. Also, Binance, which is the largest international exchange, has a lawsuit they are dealing with that was filed by the Commodities Futures and Trading Commission, which is the CFTC that regulates commodities, and then the SEC regulates securities. Well, they've been investigating potential money laundering for an extended period of time. And usually when a lawsuit like this takes place, it's not just sprung out of nowhere. They investigate for a long period of time, and then they file the lawsuit based on past stuff that happens, right? That's what the SEC is saying, how XRP was sold, and then they're bringing it up later when they didn't give them the clarity that they needed right from the get-go. So this week, what Binance has done with their US arm is they called off its acquisition of bankrupt Voyager digital assets. In one of my previous videos, I talked about how they got the approval from the judge to, move forward with that. So they're pulling out of that. And Coinbase is also facing legal actions against the SEC this week from their Wells notice to try and force the agency to respond to demands for clearer rules. So different areas in the world are more receptive for crypto. They're more advanced than others and more comfortable with this industry, especially over in Asia, which is where the majority of, Ripple is doing business, and the liquidity for XRP is flowing through because it's still banned in the United States on centralized exchanges like Coinbase. It's not traded. Coinbase, it's not that it's banned, it's that Coinbase just doesn't want to risk being seen as a company that's listing a security if XRP is considered a security. And so with the United States dragging this on and on and on, many are considering what's happening to be a coordinated attack through what's called Operation Choke Point 2.0 to stifle crypto in the US so they can usher in their CBDC program of central banking digital currencies through what's called Project Icebreaker that I covered in my previous video through the Bank of International Settlements, which is the central bank of central banks that would give them full control over all of your transactions. That's what the head of the Bank for International Settlement said, is they want full control and they can track all of it, because you can't track cash, but you can track everything on distributed ledger technology. So put yourself in their shoes, put yourself in the government's shoes. If you saw a new industry, really think about this critically for a second. If you saw a new industry, and I know a lot of people out there saying, they're not attacking crypto. Crypto's the solution. Crypto's going to take over the world. And while that's great to believe something like that, you can't be naive. You have to put yourself in their shoes. If you saw an industry growing at a rapid rate, right? Crypto is still small in the relative scale of things. $1 trillion up to a $2 trillion market cap, that's baby money. You look at the ocean of liquidity, of derivatives, of debt, the real estate market, the stock market. The stock market at its peak was roughly $100 trillion. So the crypto barely even scratched 2% of the total liquidity in the entire stock market. So when you look at how much money is really out there, crypto is so small. So when you see an industry that is growing at a rapid rate, and it's planned to grow even bigger than just a $2 trillion market cap over the next few years, and I do think it's going to continue to grow, well, if its main mission, right, of Bitcoin and altcoins and cryptocurrencies is to overthrow, the word overthrow, and replace the centralized monetary system to make for a completely decentralized new currency and change the world from that perspective, what would you do? What would you do if you controlled everything and you had all the money, you had all the power, you controlled the media, you controlled the banks, you controlled the money, and you saw this new industry popping up and it's challenging your authority? What would you do? You would probably try and squash it too. So I can't even blame them, because it's obvious that's what they're doing right now. Think about it, right? You get the world's most generous vegan billionaire named Sam Bankman-Fried, who lives in a crappy car to run the show. You fund him with billions of dollars so people believe he's the savior because he's so humble, right? He's humble and the world's most generous billionaire. He doesn't need a Lamborghini like a typical crypto Chad would, because everyone that needs that stuff is arrogant and pompous and they have egos. This guy's got no ego, fooling everyone. There's two ends of the spectrum. You can go full Chad mode with your Lamborghini and be cool with your Gucci and designer stuff, and that works because it shows people that you have the results that they want. Or you can go the exact polar opposite. You could do what Sam Bankman-Fried and live out of your car and be homeless and market it that way. But the key is being authentic to you. So Sam wasn't being authentic to who he was because they're hiding the fact, that the guy's might be a sociopath, or he probably is a sociopath. And they're hiding the fact that he's commingling funds with Alameda Research, hiding the fact that he met with Gary Gensler several times and was the closest exchange to getting the regulatory approval in the United States and was the most corrupt exchange. So How does that work? When exchanges like Coinbase, which are striving to do everything by the law from what we see, who knows? Maybe Coinbase is, maybe Coinbase isn't. So far, from what it looks like they are, they keep getting rejected with no regulatory clarity. I don't think that's by accident. I don't think what happened with FTX was just all Sam's doing. I think there's something going on there. Now, the media companies, right, which are controlled by BlackRock and Vanguard, literally marketed him as the world's most generous billionaire. So if Sam was an inside plant as a coordinated attack to bring stricter regulation to the crypto industry through Operation Choke Point 2.0 or not, that remains to be seen. So I'm not going to confirm that. I'm not going to deny it. I'm just going to leave that for your interpretation. Let me know your thoughts in the comments below about that. But I do want to point out the fact that crypto in the United States has a steep uphill battle with regulation. That's obvious. The US is forcing companies to pack up and move overseas through economic conditions. Right now as well, they're choking out not just crypto companies, but they're choking out small banks and small businesses, which is funneling that cash flow to the bigger companies and the bigger brother banks and corporations out there so they can keep you a slave forever. That's why it's more important than ever before, in my opinion, to develop a tactically superior plan. What do you need to do? Because if the Fed isn't going to live within their means, if they're not going to default, if they're going to tax the rich more, if you want to become rich and you commented 777 because you're becoming the first millionaire and they plan on taxing you more, what do you do to legally minimize your taxes, make more money, and prepare yourself when the dollar collapses so you can have more XRP, so you can have more Bitcoin, have more Ethereum, have more Shiba Inu, have more Solana, more Cardano, whatever you want, and have more productive assets? Well, number one, you need to like this video, subscribe to the channel, and share this video all over social media so we can help more people understand what's going on so they can prepare. Because here's what I'm personally doing to prepare. And again, take this or leave it. This is not financial advice. Consult your financial advisor if they are a multimillionaire. This is what I've done and what I'm going to continue to do that helped me become a millionaire before 30. Number one, you got to think of money like manure, right? If you pile it up in one place, it stinks and it rots. But if you spread it around, everything grows. I'm investing into assets that will either produce passive income or hold value in times of inflation or hyperinflation. And that's where crypto, that's where gold, that's where silver, that's where international real estate comes into play as other countries expand and more people want to move overseas, let alone hire employees overseas. But in order for you to do that, you can't just rely on the income from your job to invest, because the rise of artificial intelligence is replacing workers in industries like healthcare, finance, manufacturing, transportation, retail, education. The list goes on and on and on. You are increasing your risk every single day of being laid off. The days that go by where you don't focus on building a business on the side. So that's what I'm also doing. I'm building a side business. Now, the number one side hustle for you to focus on in 2023, in my opinion, that costs little to no money out of pocket, that's completely recession proof, it's completely depression proof, is an information-based business in any niche that you want, because people are more hungry for information than ever before. Remember, information changes situations. When you have different information, it changes the outcome and the output of your life. Education is the biggest problem in the world today. The complete overhaul of the education system and the student loan bubble that's about to burst is next. However, most people that are going through formal education, they need to know that formal education will make you a living, but self-education can make you a fortune. And unfortunately, a formal education is not making people a living because they're having to focus on surviving rather than thriving due to minimum wage staying the same over the past few years and artificial intelligence taking jobs. As always, you know what we're doing. We're backing up our truck all the way to the bank. We're grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going down in value. That's the truth based on inflation and what the Federal Reserve is doing. Fed now is not going to fix that. The CBDC system that they're planning on ushering in is not going to fix that. So in order to fix that, you have to take it into your own hands, because together we're all going camping on the beaches of the moon, and Bull Runners Club is going up. So I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.